Hey. Good morning, guys. Good morning, good night. How's everyone doing?
Good. How are you?
Good, good, good. I'm just gonna wait a little bit until it's sometimes to everyone to join in, but how was your trade day today, guys? Any good trades today?
It was pretty good. The first one on SPY that initially went up. After that, it was pretty slow.
Yeah, can you guys hear me?
Yeah, we can hear you.
Oh, okay, cool. I didn't know if I had to push the talk on. Yeah, good day. Played some Q calls at the end of the day. They smacked pretty good. Like end of day, I caught that big green candle in like 3:59. That was awesome. Literally closed after market close. Um, yeah.
Yeah, that was nice. I don't know what happened. Like everything was going pretty well until kind of JPM start falling, and then all of a sudden around 11:20 we start flushing all around. So
Yeah, luckily I wasn't in that. I exited way before I entered Qs, super early, hit them for almost 100%, and then waited till end of day. I wanted to play SPX so bad, but there was nothing.
they move, and I play XPX at open. I play SPX right at open. I bought a call with on my tiny board, and it went all the way to 115%, and I got out at the top. So after
No, I
that,
heard, I heard. I was listening to that in the
on the voice chat, yeah.
yeah, on the VC today. My like I don't know, I don't like playing like SPX that early on. Just 'cause it's just so much risk. Like the contracts are so expensive and buying like really far out of the money to make the contracts cheap like just doesn't make sense to me because like the time decay is insane, you know? Like it's like if the trade doesn't go your way, like that thing drops so fast and it takes a while for it to climb up.
Yeah, I don't trade the SPX. I mean, I don't hold it for too long. I mean, I hold it for maximum 10 minutes. 10 to
Yeah.
something like that. I
That's
don't like
usually how
to.
it goes. It's just like last week I had like two really good trades with SPX and I've really liked trading it like after 350 twice I got to hit. I had to hit 10 contracts at 20 cents twice. One time it was calls, one time it was puts, and then they went almost like a little bit over 10x. That was pretty sweet.
Yeah, that was pretty nice. Cornbread. It's saying that I have to call my place on VC. Sorry about that, cornbread. The problem with VC is like that's Flip's domain. So I don't like to when I got into some of the plays, he was talking and I don't want to scream or talk over him. So it was my bad. I should have just posted it on my tab and not on VC. So I go into VC sometimes for fun because I like the interaction, but my main responsibility is to call those plays in the tab. So sorry about that, guys. And more when when just at open when we have flips, talking and everything. I'm gonna try to focus more on my tab and not be on BC that much because I don't want to overlap with his trades.
Hey, whoever's Scotty Golden, your camera's on. I don't know if that's intentional or not.
Yeah, we don't want to see you taking a deuce, man.
I don't see that, so sorry. Remember, guys, that you're live, so if your camera is on, we see everything. So please watch out with your cameras and if you're not going to be participating, please mute yourself unless you want to do a question. And just gonna wait until one more minute until 8:05. So today, guys, I just wanted to talk something different. We know we go through levels all the time, and we try to go to see what happened on our trades, and we focus a lot on our day trades and scalping and all that. But I just wanted to expand a little on the subject. And leaps are like, we use them a lot for longer trades, and they're a tool that I don't know if you use much or not, but I encourage you to use them, because we will talk about the uses, the cons and pros that they have, and they're really fun to trade, because sometimes, you know, you have a tiny board, it can help you out to, with a little bit of patience, actually grow with your board, but it gives you less volatility. So we will go into that. I'm gonna start. I'm just gonna go for why they're called leaps, and I'm just gonna do a little definitions and to know what we're talking about, and then we'll go to some examples, and then we go to the chain of options. And in the chains of options, I'm gonna try to interact with you and show you how do I use them, at least, and why I choose them sometimes over buying shares, and how you can use them for hedging. And they're a beautiful tool. They're actually options, in my opinion, were created for people with huge portfolios, so they can try to protect their portfolios of shares when they're, you know, on the volatility of the market. So the definition of LEAPS are just long-term equity anticipation securities. These are exactly like our normal options that we do for everyday trade. They're just longer. Normally, they have a predetermined time. They're considered LEAPS if they are over a year, 2 years, or sometimes, I mean, you can call it if you have 6 months or 8 months. It's just not a 1 week, 2 week, 3 weeks, or we try to have it a little bit longer. So remember, what it's an option is just a leap of grants that the buyer that have the right, but not the obligation, to purchase or sell the underlying asset at a predetermined price on or before its expiration date. I just want to remind this, because with leaps, we can do some techniques that we cannot use on our shorter term options contract. So I just wanted to remember what a definition of an option is. So this is all right. Someone mute. Someone needs don't like to use leaps. So advantages. The advantages of leaps, guys, it's you have a longer time horizon. That's why these are just some of, you know, many. But hey Nando, welcome to the chat. Welcome to the lecture, Nando. Please feel free to interact whenever. Everyone remember, guys, you're not muted. I left everyone, the microphones are open, so please mute yourself if you're not asking a question or interacting with the lecture. Thank you. So some of the leaps, guys: longer time horizon, more time for the underlying asset to move in the desired way. What's good about this? We change. We don't trade on the 5 minutes. We don't trade on the 50 minutes. We go to 1 hour. We go to 4 hours. We can go to the weekly, daily. We look for longer moves. We don't care about the noise that happens on the shorter time frames. I mean, even though you can try to buy a leap with a certain time horizon expected, one of the advantages that you have is you can sell it whenever you like. And if you are having enough gains and you're happy with the move that happened, you can sell it and it's okay. The time decay, theta, our famous Greeks, is slower compared to short-term options. And we can see that later on the chain of options. Normally, the theta is going to be like $1, 0.50 cents, point something, depending on the time that they choose. So you're not going to get something like when we buy SPX, like same day SPX, that it can go $50 up and then you are negative $50 just because 4 5-minute candles went down. So it's very, very safe. And then the leverage gives you the ability to control a large amount of stock with a small price. And this is, for me, the best advantage of why I buy LEAPS. And I'll talk about that a little bit later on. So this is just an example. If we have purchasing a LEAP on a call that you believe is going to appreciate significantly over the next 2 years, they allow you to capitalize on the growth potential with a lower upfront cost. So for everyone who has a smaller port, it gives you a huge advantage. Because remember, why do we buy options? Well, if I want to participate on Netflix bull run that happened today, and I do not have, to buy 100 shares of Netflix at a $600 price per share, you can always get a LEAP. It might not, you're not gonna spend maybe that's, I don't know, 60,000 or whatever you need to spend for that amount, but it can cost you 2,000, 3,000 bucks. And then you can have the advantage of the move. And that's why I love about LEAPS. This is just a numeric example. If we buy a 25 strike price for GE on a call option, and this is gonna, like, every time that we buy an option means that we're buying 100 shares with an expiration at 25. If you exercise that option at 25 and the market price of that option is higher than your strike price, well, you have two choices. You can sell the contract, or if the price of GE at that time it's more expensive, you can always sell that, $25. You can get exercise on that, and then you sell it at the market price. And that's how some people like to use the options as a leverage. If it's less, well, you will allow the option of that, to lose the price of the amount, and then you lose the premium. And you calculated that when you did the investment and say, well, if I invested X on that option contract, it's okay if I lose it, I don't mind. But if you gain, you're gonna gain a lot more with a less upfront investment than if you do it buying your shares. And I think we all know that. Is everyone clear until here? Yes, good, no, all right, we keep going. And the strategies, I'm just gonna talk about different strategies that we may have. And one of the cool things that you have is like you can have, LEAPS, like calls, LEAPS calls, just buying normal calls with a long time. It's a substitute for buying stocks, as the previous example said. I might have a $5,000 port. And if my $5,000 port, but I want to participate on Netflix or JPM, and I do not have, $14,000 to buy my 100 shares, you can buy a, I don't know, $120 or maybe a $300 position, and just leave it there for a year or for 2 years, and then probably you're gonna make a lot of money out of it with a small investment. So that's pretty good. Your appreciation with a smaller investment, you have a lot of more appreciation. And again, I'm just doing another tiny example. We will have more fun when we go to more in the chain of options. But ABC Corp is trading $100. We buy a LEAP with a strike price of 110, and that is expiring in 2 years for $15. If that company rises to 150, the call option is going to be 40. So that's 150 minus 10, generating a significant return. That's going to be 40 per each of those that I have in my contract. So it's pretty good. As I said, depending on the size and the amount, because sometimes the other thing that you can do, even if you have a larger port, you don't get one LEAP, you get 5 LEAPs. So now you have 500 shares of that with exposition to the movement of that name, and that's pretty cool. And at a quarter of the price or less, like it's an eighth of the price. We can also use the LEAPs as a covered call writing LEAPs. If we have the exposition, we can sell short-term calls against them. So if I have 100 shares or 300 shares of Apple, I can always sell calls against them and generate income on my premium. That's going to pay me a lot of money because I have the exposition to it. And if I'm waiting for a long rotation of a certain name like what's happening to maybe what happened to the EV cars, or maybe what happened to Tesla, that it's been on the down trend for a little while, and I have 100 shares of Tesla, I can just sell calls on Tesla, and then I will be just gaining premium all the time from those leaps, and I can buy those for a year or less than a year, and it's gonna be a great way without volatility to make money. So there's actually there's a guy that he has only like SPY and Qs on his port. He has like a $2 million port, and the only thing that he does is sell calls or sell puts or buy puts, depending on what's happening on the market against that position, because he built that SPY portfolio for like 10 years, and now it's like a 2 million something like that, and the only thing that he does is sell or write leaps against it. So it's a perfect way to do it, and he makes money every day basically with it. Another example, we buy a leap call with a strike price of 100 expiring in 2 years. If we do a cover call, we can sell one a month, one call, and with a strike price of 120 for 3. That's for $300. If the stock stays below 100, I keep my $300 daily, and if it rises above, the call will also gain value. So there's no lose on this. If you have the position, it is fairly easy. Then we can use it for hedging. This one, it's awesome because this is another way how big money uses leaps. If you have a long-term portfolio and you have your stock up, your position, you protect the downturn. So how do we protect it? Like if I have 2 million,
what happens to you? Oh,
here we go. If you have $2 million or $100,000 in my port, and all of a sudden, we have a little, start coming down, we have a little retrace on the market. When I see that happening, I can just, buy some leaps, some puts, and then hedge whatever's happening to my port. Let's say that my port went down to 20,000 to 80,000, but I could have buy, I don't know, 5, 6, 10 leaps for, let's call it SPY, and I could have made on a year or something like that at around, I don't know, $8,000, $10,000, depending on your strategy on how good you do it. You can compensate for whatever your port is coming down. So you're making money on the downtrend, and then when the markets start going up again, your normal port is going to appreciate again, and then you protected that loss or that downtrend. So same thing, you own 100 shares of whatever company you have, and it's trading at 80. You can buy leaps with a put strike at 75 that are expiring in 2 years, and if that company drops to 50, your put option will offset the losses from what happened from the stock that went from 80 to 50. So it's a great way to do it. It's a great way to use it. The only difference with our normal calls is the time, and then how do we choose them? And we will go into that. And this is a very interesting other way and technique on how to use it, guys. This is a synthetic long stock. So we create a synthetic long position by buying one leap. So I can buy one leap of, let's say, Apple, and then I can sell another leap on that same strike price. So this is like if I own my position of 100 shares, because I own a leap on a longer term, I can actually sell against it. And it's very interesting because I don't have the money to get into that position, but by buying a leap, I can play some of the strategies with the options, like if I will own the whole 100 shares of that position. So X company is trading at $200. I buy a leap, a call with a strike price of 200 for 2 years. And then at the same time, I sell a put leap for the same strike price and expiration. So if the price rises on this position, I'm going to gain value that is exactly similar to owning the stock. So I can mimic owning 100 shares of a whatever name and then played against it just by buying LEAPS. So I don't know if you have ever tried to do this or not, but that's really interesting. If not, you have never done it, I encourage you to go to your paper trade and play with it. Go to paper trade while we are like, take half an hour, 1 hour of your trading day and go into paper trade and buy 3 LEAPS of any name that you like for a year and a half, and then try selling, puts against it. Try buying calls against it. Play with those positions to see how they react and how the market moves and how your position moves with respect of whatever's happening with that price action of that chosen name. It's really, really nice. That's how I kind of back test my strategies and my game, like my trades. I will go during the day to paper trade, and all of a sudden I say, what if I do a straddle here? What's happening with this move? How this is gonna move? If I have this and this one, what if I sell some LEAPS against it and then I'll short some shorter time calls? I encourage you to go and go to paper trade to play around with these instruments, because don't try to use them with your money while we're live, because the chances that you're going to lose them are pretty big. So this is a little more how do we analyze the LEAPS and how do we choose them. So same thing as a smart report, is everything has to do with the price action and the trend, but the only difference is that we are not going to be watching the 5 minutes, we will be watching the 1 hour, 4 hour daily. So look for fundamental strong stocks with growth potential. We're watching what happened to Netflix, guys. Netflix was a super buy on a retracement that it did. We could have buy amazing when MMA said that this is a buy price for Netflix. We could have buy LEAPS. Like if he had the money to buy 400, 500 shares, that's awesome. But if we didn't, we could have, maybe used $1,000 and get some LEAPS on Netflix and profit out of that move that happened for the last 2 weeks or so. And I will go into that chart because I would like to use it as an example. Then volatility. Higher volatility can mean higher premiums, but also greater potential for profit. So don't be scared of the volatility. Volatility is supposed to be our friend, because that's when we have moved to trade up and down. But also when we see that a stock it's moving, that's what we're looking for. That's what we're looking to take profit out of any move. So if we see a move, like again, I'm going to use Netflix as an example. When we start seeing that it's at a very, very on-demand level, and then all of a sudden it start moving up, that's our clue. Same thing, but we just do it on the long term. That's what we do for day trading. Then the strike price. Choose a strike price that align with the market outlook. Go to the 4 hours, go to the daily, and then see where previous highs were, where previous moves were, and then try to get those. Don't go aleatory and blind into, I like this one, is 40 move ticks out of the money. I'm gonna get this one because this is the one that I can afford. No, normally, and we'll go more into detail on the chart, we'll go to previous prices, previous peaks, and then we'll try to go as close as those that we can, because normally we're expecting that that's a number that is going to go back to it. So on the Greek side of the LEAPS, you got delta, that is the sensitivity of the stock and the price changes. So always remember, higher delta means the option will move more like this stock. It's going to be like very near what the price of the stock is going to do. The theta indicates time decay, so LEAPS have lower theta compared with short-term options. One of the big advantages is, as I say, we buy a SPY contract for next week. It's going to move up and down with each 5-minute candle very much. If we buy for a year, you're not going to see that move as much. It's going to move a couple of cents, and that's it. Not $10, $20, $50. So, and then we got Vega, which is the sensitivity to volatility changes. And then a higher Vega means the option is more affected by the changes in volatility. So you don't need to go strictly into the Greeks. I mean, if you know them and you know how to use them, it's amazing. You can also use volume and implied volatility, or you can use the what's the other one? I just forgot on my hand right now. The open interest. I use the volume and the open interest. Those are the ones that if you want to, and then I will see how the delta and the vega of that option is. So how to manage your positions? You got to, you have the market risk as everything. You may want to buy another name that I like, on, which is the shoes. I'm trying to get a position into the shoes company because they're being, I can see the freaking shoes everywhere right now, and they're taking a big share or a little share of the market, but you can see more and more. So how do I follow that move on longer term, and how do I position myself? You can have a liquidity risk because they have a lot of wider bid and ask spreads. Why? And we're gonna see that again on the chain of options, because leaps are so far away in time. We don't have as much volume as people are not as interested on getting them. So sometimes spreads it could be $100, could be $80. So you got to be careful, because in case you need to get out of that leap and we're not too close to the maturity, and we didn't have a move that it was big enough to cover your price, you might end up losing on that trade. So, but it's gonna depend. That's market risk. Diversification is a spread investment across different stocks and sectors to manage your risk as everything in your portfolio. And then use stop loss as a protective. Nothing new here. This is just more examples. This is how do we do it on tech stocks. I put it how to do it on a cover call. I'm gonna jump this because these are not really necessary, and I know that you guys don't love to have tons of samples like this. You want to go to more real life material. So this is just a conclusions, the pros and cons. Long time frames allows selling of the option. Then you can use it as a hedge, which is amazing how to hedge with leaps. They're available for equity indices too, and then it's less sensitive to movement of the underlying asset. Cons, the premiums are a lot higher than normal options. Long time frames, you have that investment tied to that long time frame, but that's why you're choosing to buy an option, not a position. The company can move, and that move can be against what you were expecting to. And then the prices are more sensitive to changes in volatility with the interest rates. Whatever happened in the interest rates are going to affect on the long run whatever happened on the equity market. So we know that, and that's part of managing your portfolio, but it's good enough to say it. And this is what I like. This is, I cut there. Sorry that I don't know how I cut. This is Apple. This is Apple as of yesterday. And what I did is I separated the chart and the move on Apple. And this is a 165 call on Apple, that it's in the money. And this is the normal price if we were to buy shares. So I want just to make a little point here, guys. And this is interesting on how different can be getting, an option contract on a leap or buying those shares. So, and this is a technique that I encourage if you want to build your port and we don't have 100K, 25K, 30K to build up that port. Let's see this example. So as of yesterday, I'm just going to grab this contract, the 165 that was in the money. I'm just going to choose what happened on the move. So I'm going to choose when we were the lowest of the move until the top. And then what if we bought at the same low and did the same move on shares? So this is going to be an option contract, the 125, the 165 that is in the money, and this is going to be shares. So on the share side, if we buy 100 shares, it's going to be 16K. And I don't have 16K right now to buy on my port. So, but if I see the difference and I want to see I bought it at 165. And the big move that happened in Apple was all the way to 190. And let's call it, I'm gonna round it up at 190. So 165 to 190. If I bought those 100 shares at 189, and I divide that by 160 to round it up, -1, and I put it, and I times 100 just to see what the percentage is, this move is going to represent an 18% increase on my shares. This is my gains on spending $60,000 is going to be roughly $1,800 or somewhere around there. So, no, that's good. Not much. But look at this. The prices on that 165 dollar call option went from 34.7, and I'm just gonna round it up to 35, from 1,700 bucks. So we'll say that from 1,700 bucks, that's that same contract, the 165 that I got here for 1,700 bucks, went to 3,400 bucks. So we do the same math and we divide 35 to round it up, divided by 175, and then we divided by 2 to put how much was this? This is 100% gain on our money. And I only use 1,750 here. So this is where I find, like, this is the sample that I I used to say I had for all this move here for, this supposed to be the same time. This is the 17,524 and 17,524. All this move just made me 18% on my whole move. But by buying, and this is a leap. I mean, I'm supposed to stay this for over a year, but just in this move, I made 100% on my original investment. So it's amazing. It's great. Imagine that in one, like if we buy that and we go from the whole sample to 1 year, and we can actually go and see that on the charts, the difference is huge, and we can do the math on this. So this is a way that you can build your port and help it with, maybe you don't have the 1,750, but maybe you had maybe $100, maybe $150, and you can start doing it, in a smaller, cheaper name, or
Have a good night, guys.
sorry. So I'm gonna move to the charts here. Any questions while I move here to the chart, guys? Any questions so far, guys? No questions whatsoever. So now we're here. And this is like how my normal charts look like, guys. So you can see it. This is how my normal charts look like. And let's see, I have a question here. Let's break down Amazon. Higher time frames. Let's do that. Let's do Amazon. I got Nando here. Let's do Amazon and let's see how this works. Let's go to the 4-hour on Amazon. Sorry for my mess here. I think that, let's see.
How's it going, Empanada? Yeah, I have a mess on my Amazon chart too. On the higher time frames, shit looks like a mess. It's all good.
Yeah, sorry about that, man.
Today was wild. I am in puts, you probably know already. I was concerned in the morning, but usually when you see moves, you expect volatility, right? As soon as the gates open, especially for like the first 30 minutes. I would say, but mainly the first 5-10 minutes. However, yeah, I was concerned a bit, but I'm glad that closed under 184. But there's a lot of people that are bullish on this. And I do see a few signs of bulls maybe breaking out of this zone, but after today's close, I do think we see a gap down soon eventually. I wanted to hear what you thought about that.
Well, this look at my chart. This is what I got. This is how I normally I'm gonna go. I try to make this a little bit more easy to differentiate from the whole mess that I have. And I don't want to take them out too soon because I sometimes we go back to them. So we see this is the big move that we went down. We broke up, kind of started this new move on the way up. And here is when we change again to this lower trend. So I do agree with you on, you see, how do we, I was looking to go, I was trying to see if we're able to break this little, trend, the higher trend here side, but it went up, I kind of scalp it and then came down completely. And for me, this is the key. This is the 20 daily SMA. I'm a big believer and I support and I trade a lot on the higher time frame on it. And it's looking that it's going to break it down. If it's going to break it down, my next level is going to be the 50, or I got my 50 is going to be my dynamic level.
$6.99. It's the ultimate soul meal. Get personal pan pizza or
I just muted that guy. And
Same guy. Right.
and I'm trying to see, this is what's going to happen here. So I'm just going to go to the 15 minutes for a second. And you see this. I traded this from the up all the way to here. And I got out. And I left a runner that I liquidated somewhere around here because I saw that we were going back to the trend. And when we went back to the trend, it was too late for me to jump into your call because you got your calls from last week. But
Yeah, I know. That early morning pump was definitely a good payoff for a lot of traders. Back in the day, I would say like 2020, 2021, I would draw channels similar to the one you were showing.
yeah,
And I would always nowadays you can see my tab and you'll see how I mentioned the lower highs and higher lows very often because that's just strictly price action, right? And
yeah,
most of the time back in the day, I would long this here and I would lose money. And the reason I would lose money is because I wouldn't buy enough time on my position. So for example, you today, I'm not sure if you bought a contract for the week,
yeah.
but normally,
But I just scalped this. I wasn't looking for a long term. I jump into it when we open here, when I saw this, and then I
yeah.
jumped. And I sold it somewhere around here on the pre-market high. I have my overnight high. This is what it means. Yesterday high of the day. So when it passed through here, I'm out.
Yeah, that makes sense. If I was a bull today with a weekly expiration, I would definitely have taken profit. But yeah, definitely back in the day, my issue was that I would long this with a weekly expiration. And I would probably hold through that downside, right? I wouldn't know where to cut my position. But yeah, now I just focus on the lower highs, higher lows on a higher time frame. And even, if I look at smaller time frames, I'm just looking at those lower highs and higher lows to pinpoint my entries. But on a higher time frame, obviously higher lower highs are still in place. And I feel like if I just buy enough time on that, the market is pushing higher, right? S&P 500 at above 530. And Amazon isn't really correlating too much with that, right? A lot of people are surprised, thinking, I'm in calls. Why aren't my calls on Amazon going up? And that's the simple downtrending channel we have going on now, which I see a lot of people don't go on higher time frames. But I do hope we see more downside there, and that's why I buy time most of the time on my positions. But definitely a good trade in the morning. I feel like those first 30 minutes are just like a 50-50. It's never like too confirmed on the move. So I don't really like getting too active on at the opening.
Yeah,
I
me
think it's all
neither.
volatility, rather wait it out.
So you bought the July 6th, the June 7th, sorry.
June 7th, yeah. I figured if I went with May 31st, I would have some trouble. Like my contract would have been down maybe like 50% today if
You
I
got
did
the,
grab that May
you got the
31st.
you got the 180 put at 196, and this is the price right now.
Yeah, it closed like a few bucks in profit, like $5.
Yeah,
But definitely a huge turnaround from The morning. The
Oh
morning
yeah,
was
yeah, yeah. I mean,
burning.
I mean, if we never had this pop here and we just gotten straight down, those contracts will probably will be like 20% more at least.
Yeah, and that's what that would be my problem back in the day. I wouldn't grab the right amount of time. So most of the time that I do take my losses, it's because, I run out of time and that theta, the Greeks start kicking in and I have to cut my loss because you know what you're getting yourself into. But you buy the right perfect amount of time and you base yourself on a higher time frame. And you are with this is a lecture about leaps stuff, so it's kind of related. It's just being patient and giving yourself time for the move to happen.
Yeah, yeah. And it gives you enough time to react that we don't have that when we try to trade SPX at the last 5 minutes and we lose $50, $500 on one, like there is another style to trading and you can trade it, by buying more time, being more relaxed, see the higher time frames. And I have a question for you. What, like you bought this on the uh on the 17th and we are on the 20th. And what made you not panic sell here? Because that's what the question that, a lot of the new traders are going to ask is like, okay, Nando told me to jump on this thing on here. That was Friday. And then all of a sudden I see that everything's going up. It's not coming down. And not only it's coming down, like this is 1 hour. If I go to the 5 minutes, look at that candle that we had. Fuck, I'm gonna get out of here. Why did you stay in your trade? And this is
Okay,
for
so
the
yeah,
traders.
so that like I mentioned earlier, that move today was definitely concerning. I think if we continue to like maybe 187, I definitely would have stopped out. But my main thing is this, and I mentioned this to everybody that books a mentoring session with me. I break it down all the time. Everything comes down to your risk management, right? If you get that one part down, if you get that one part established in your trading, you won't have a problem, right? And now it becomes even better when you're able to over time spot out your best tickers to trade, because I don't trade too much tech, right? There's a lot of losses that come with trading tech, right,
Yeah,
throughout the
yeah,
weeks and stuff. So I have my individuals that personally I personally traded for more than 3 years or so. I would say like stuff like eBay, Disney, PayPal, SQ, Boeing. I have a good, I would say, relationship with all these names. So like I mentioned before, the time that I bought on Amazon is the most important thing. But after that, or even before that, comes the risk management. I do enter those swings with just a starter position, and majority of people they only know of averaging down into positions, right? I like seeing the trade go my way, and then I'll size into my official size, right? The
yeah.
size according to my account, and that's
And
where I
can I
think
can I
most
ask
of the
you just for reference for the persons that are like what will be they don't need to be the number exactly, but you bought 3 contracts on your puts, and that's is your entry. How would you step up into your full position?
So for example, after like for example tomorrow, I think the rest of this week, we will be given that opportunity, and I think we saw it today. So obviously, me entering with a starter size on Friday, the May 15, 17, I mean, um, this trade becomes it looks even better for me after the move that happened today,
Yeah,
and Bulls not being able to capitalize on that. So now that we're back to initially where I entered, even lower than when I entered, I can say, okay, this trade is even more in my favor now. And matter of fact, that it looks even better than when it did before. Why? Because, our sellers are still there,
yeah,
right? And there's a lot of key points. Like for example, the S&P, making new all-time highs, and Amazon couldn't care any less about the move that's happening in the S&P 500, right? So now it's just being under that 184 level, 185 zone, and I can say, okay, this trade is still in my favor. I have a little bit more confirmation. There's a few more bearish signs, signals that I'm seeing here. So I'll share those tomorrow. You know, I try to do the best thing in my tab to understand. I try to explain stuff in like a kindergarten way, so everybody understands, right? Even people that just started trading yesterday, it's not that hard to understand. It's
Yeah,
simple price action, right? So after
and you do a
today's
great
move,
job doing it. I love your explanations are pretty straightforward. Sometimes mine are more complicated.
yeah, that's what I mean. But appreciate it, Empanada. But yeah, now you know today's sell-off move is good. It's good to see, especially when you have time on your position and you're letting your thesis play out, right? Obviously, we
So,
got a nice little pump in the morning, and you know, usually when you see a nice sell off or rally in the first 30 minutes, I don't pay too much attention to it because it's all volatility. And today is a good example of that, right? We
so let's
sold
talk
off
about.
everything.
I want to get pick up your mind on the leaps because to get back to the subject. So this is the daily chart, and look at this. It looks like a double top here, nicely on the daily. So if we were to say that this is a double top, and we are about to break the 20 daily SMA here, that means that we can go. We have a gap here, and normally structurally we need to fill the gaps. So we have a gap here that it hasn't been filled, and we have a gap here. So where will you see your price target being? 167 from where we are? Because going back to the leaps, Nando bought the 180 guys. The 180s are telling me that he's expecting the move to go somewhere around here. Is that a correct read or?
Yeah, I think we go a little past that. You know, when it comes to I'll this is free game for you guys. Double tops, right? I mean, yeah, double top, triple tops. Well, yeah, mainly double tops. These things after double tops happen, right? And you'll see these in my charts a lot, like inverse head and shoulders, double tops. Sure, I trade these very often. And the thing about a double top is that once you get that second rejection and you start down, you start seeing the stock downtrend towards the downside, you'll notice that after that double top rejection, what could come after is an inverse head and shoulder, which you can clearly see in this chart. So what I would do is I would go back to that time frame you were on and I would see the bottom of the left shoulder or where you would identify the bottom and go based on that. Now, although we do have a double top, it doesn't mean I'm going to be an ultimate bear, right? We are obviously in a long-term uptrend. You know, you can't be too bearish here, but you can see the inverse head and shoulder forming eventually. I do think bulls will get their day and or their week and get this up to retest that 190. Well, I think Amazon at 190 is too cheap, so that retest is definitely going to be great, and that'll probably give you a triple top or you get a huge breakout. So main thing here, you get a double top and you will get an inverse head and shoulder after. And you know, even if you don't, you can just guide yourself by marking those levels. So I would probably mark that around, let me see here. Like, yeah, like 179.53, 53, 180.7. I would consider those like the lows of like that inverse head and shoulder. And if, you know, we do go lower than that, then that just tells me, you know, don't be bullish on this, don't buy calls. It's very simple. You know, just be patient in a way.
Yeah, yeah, I like it. I mean, I'm just this is on the subject of buying leaps, guys, and that's look at this move, the potential that it has. It has all the potential to go all the way here. So if we buy weeklies, it's gonna be a pain in the neck because you're gonna lose the advantage of grabbing whatever. What if this keeps going down all the way here? So I can even.
Yeah, for Amazon in particular, I think the topic of leaps is
You
out
gotta
of the
wait until
window
you get rolled
because
off with two quarter-vital matches. The first contest of the rekindling of an old rival.
Oh, sorry about that.
yeah, so the one thing with leaps is that obviously with a stock like Amazon, like you look at the last 6 months for this stock, you might be a little too late for that. And even though it might work out for the next year or so, it's not the move or the trade I'm anticipating. That doesn't mean I am short on this. It's just that I don't think that's the we've ran so much. I think it's better if we just go week by week with this because the volatility is gonna be there. I don't think you should focus too much on leaps because we've ran an insane amount, and to be just like I mentioned in trade for you can't be bullish on Netflix after it ran $100 in the month of May, right? We're 20 days in May. And it's not easy to say I'm long on Netflix. Like you're probably not gonna be wrong. You get me? But the chances of you being right are slightly right. But that's where the market gets you, especially long in stuff that's up so much. So you definitely have to be careful with those leaps. The advice I would give is what leaps is buy the dips and not the rips. That's the only thing. And Amazon might seem like it's a good buy, but I need to see like a few candles to the upside for me to to buy leaps or be invested into Amazon. It's tough.
Yeah, absolutely. Look at the Netflix. Look at this Netflix here. Look at this whole of Netflix and what it's been doing. This is a ripper on the daily.
Yeah,
Wow.
Netflix is a good representation of
Look what,
Amazon as well.
yeah,
You
look at what
know,
happened here. Went all the way down, broke all the levels. Find some hold here on the 100. Stay at the 100 daily SMA, and then boom, way back.
yeah,
So that,
that V reversal. And once you see price move from 549, 550 to 600 plus, all you have to do is look at the left shoulder, the left inverted shoulder, and just guide yourself by those levels.
yeah,
And Empanada has them, drawn out exactly how I would here, 601.4, 606.86. Those would be my levels. If I'm long, any break below that and I'm out. It's very simple. You'll take your loss quick. It'll be like a 10, 20%. And obviously that's 10, 20% for me because I'm buying time on my contracts. If you're trading weeklies, you might see a good loss. But obviously after so many losses, you have to adjust and not make that
Oh, yeah.
same mistake once again. You get me?
Yeah, absolutely. I love that. Thank you for the input and adding, because it's always good to hear, some explanations on why do we take the trades that we trade. And this is what I was trying to do with when I traded Walmart. Look at that move in Walmart when I went for longs. I was expecting this trend to break, and I wanted to buy a little more time on Walmart. And then the other one that I'm trying to buy, Leaps, it's on the one of the shoes. It's pretty much new, doesn't have that much movement, but I'm trying to see. I expect this thing that it's gonna keep gaining momentum and market, and I'm trying to buy Leaps on this. So I'm trying to go for contracts that are. Look, this is my positions. I'm on January. I'm on January 17 for the next January of next year. I got some calls here for that, and I got some more that are in the money already.
Yeah, I mean, I do, I am a fan of leaps. I am a swing trader. That's my specialty. I don't really like day trading too much. I feel like it takes too much drainage, like energy drainage out of you. And there is
Stress.
times for everything. I do have my weeks where I just decide to fucking trade the S&P and QQQ every day. But with these leaps, the one thing is, like, for example, Walmart after that pre-split is not the same Walmart that I know, and it could never break that 140, 150. So I can't really trade that anymore. But I am very glad you caught that move.
Yeah, Walmart
You know what's funny?
stayed there for a long time, and it took a lot of time, like to move from here to here, and then and that happens also with for example, look at how Tesla is moving right now. Like Tesla, it has changed from, look at that trend. Sorry guys that I know that it seems confusing, but look at how it's respecting. Look at this trend. Got up and then up. Now that's why I keep.
Yeah. The thing with Tesla,
Yeah, go ahead.
like lot of people that wake up and they tell themselves, I'm gonna invest some money in Tesla or buy some calls and I'm gonna get paid because it's a great company. You know, I don't really trade Tesla like that. Like the technicals are okay. Usually what I look for in a chart is, you know, the inverted head and shoulders, double top, triple tops. And you know, Tesla does respect that, but when it comes to that stock now, it comes down to fundamentals because fucking Elon Musk has, I believe their best-selling car has lost like 50% or like 60% of the value, or just based on like price decreases and stuff. And that's obviously not good for your company. And another thing, for those of you that didn't start trading at 20, I would say 21, or like after all the hype, you know, Tesla was a $3,000 stock. This thing did have a split,
Oh
30
yeah,
to 1 split, I believe. I can't remember.
yeah,
And you know,
40
now
to
the
1.
price action is way different than there. And I feel like there's where that year is where I really, you know, established myself as a trader in terms of like price action and understanding stuff, because you really had some volatility back in the day. But now is like simple moves. Tesla isn't really a tough stock to trade now at 170 compared to back in the day at 3,000. And I say back in the day, like talking 20 years ago, but no, just a few years ago, this thing was at 3,000 before the split.
Yeah, I had a stock position at 394 and $400, and I sold it everything at 2,100.
Yeah,
And
Amazon and Tesla, big. I remember, I mean, those are the main two. Um, I used to trade those two very often. I mean, the volatility back then was insane. You would wake up and stock is moving 40, $50 daily.
hey, and
But you
no,
know,
not
in that
everyone was able to
volatility,
get those contracts because that was big port moves. Big port, like the contracts were very expensive.
yeah, in the thousands range. But you know, that volatility is what would you know, it's the main reason, might be the main reason why I don't trade the first 30 minutes to an hour. I really let the market settle and really establish itself before, you know, creating my bias. But yeah, if you were, you know, trading back in the day when Tesla was at 3,000, you definitely know one or two stuff. Now,
Yeah.
I think you should be a profitable trader, I would say.
Look at this move on Amazon right now. Look, you're talking about inverse head and shoulders. How do you like this one?
This is Amazon?
This is Tesla.
Tesla. Yeah, I mean, the thing now is, you know, it's like similar to the people buying at the top on, well, not the top, but you know, saying they're long on Netflix after it's ran $100 in the month. You aren't a genius at this at those levels. But in terms of Tesla, like for example, we've gone down so much that I wouldn't be surprised if any day you got a $20 move to the upside or 2 consecutive days of a rally. But that's not the type of trader I am. When I was a trader that only focused on reversals, I was unprofitable. I'm not gonna lie to you. It was tough to make it through. You got me buying those dips, buying those knives, like thinking you're going to be a genius calling the bottom and calling the tops. That's not gonna work.
Yeah,
I'm more of a continuation trader now. You get me? You have to see the setup form and okay, this looks good. I got this more confirmation, a little more confluence today, especially on Amazon, for example. You
me
know, we're
too.
under that 184 after breaking 186. So that confirmation for me grows even higher. And I can say, okay, I'm entering this trade because things are aligning more in my favor, not just because I'm averaging down or the stock has been fucking, you know, down 50, 60% in the last year. And let me just short this stuff. It's just more of a better approach. You know, I don't do too much of reversal trading anymore. Instead, I rather do like breakout trades
Yeah, me
or
too.
focus on breakouts. I think reversal trading is tough. And if, you know, that's where I learned my stuff too as a swing trader. You know, I would take losses finding those reversal setups, and it changed when I would buy time. If I could buy time and be right on my thesis, I would, you know, make some money on that reversal trade. But if you don't make money on that same setup, I would say at least 6, 7 times out of 10, and it's probably not something you should focus on. So, and you know, this all reflects on my tab. I don't I pick out the same winners from all the time. You get me? I don't trade I don't, I could probably execute a move on Tesla every day, but I'd rather not because I know that loss is coming. You get me? It
Yeah.
happens to everybody. So I'd rather be a little more picky on my individual names and rinse and repeat, keep doing that over and
And
over
that's what
every
we
week.
do. Like you see that Flips trades AMD. I trade a lot of Apple. River trades SPY and AT&T. Like you get to your name that you get to know the moves and you get comfortable trading, and then you do the whatever strategy works for you, and that's really really awesome. That's part of your journey as a trader. I love it. It's
Yeah,
really
you can't be I am very once I'm in a trade, I'm very biased on it. I show you see my ego come out very confident in the move that's gonna happen. Like I know I could take a loss, but my attitude towards the play is like, yeah, we're getting paid because we're getting paid. I mean, a lot of people notice and they like it too in the Discord, but it's not always like that. Losses do come around. You do have bad months. And I've had them. It's been a long time since that because I've been able to, focus more on my strength than my weaknesses. I feel like that's the main thing. You can't make that same mistake over and over and over and over. I don't remember the last time I gambled on earnings. That's like the one thing that I see a lot of people do
yeah yeah
in OOT, and it is fun. And the one advice that I could give, if you're a profitable trader, you're making your money, go ahead, gamble all you want. But if you're just starting, and when I say starting, I would say 2 to 3 years, it's better for you to just focus on what you think is best for you, what pays you the most, and just master that one thing.
and
The
secure your
last
profits.
Yeah, execution is everything. A lot of traders, there's many traders who know how to chart. I know many personal friends that, they saw what I was doing 3 years ago. They got on their computer, started to learn everything. They're very smart. For example, I'll give you an example, not shitting on nobody, but Toasty is a prime example. The dude is very intellectual, right? He's an intellectual dude. I'm not gonna lie. The dude, and he's young too. He's able to break stuff down in a way that I probably can't. I haven't really put my effort into lectures and all that. Although I know I could possibly, get through that easily just because, you're speaking the truth, what you know.
Yeah
But
yeah
Toasty's very good at that, but he might lack on the execution part, which is where most traders lack. So these close friends of mine, they did like their 1 2 years of just learning everything and absorbing, reading books, everything, and they know a lot, but they can't execute for shit. I'm sorry to put it like that, but they can't do anything. You get me? They know everything, but it's hard because when it comes to options, it's way past. What it comes down to that psychological aspect of things, and you'll notice this a lot in my tab. You can't really trade every day. You can't put these swings out every day. Um, every
yeah
day is not
and
meant to be
sometimes
traded. Will come for losses.
that's something really I'm gonna to elaborate on that. Like sometimes for everyone who's listening, sometimes people get anxious, like are we gonna jump into SPX? What do you think about this? What do you think? Like sometimes there's days that even us, we don't feel that there is worth trading, so we don't call anything because remember, every time that we call something, it's because we are trading it. So if we don't see the right setup and we don't see the right trade, we might not do anything on the day, and that's a day that you're green because you're not putting money at risk. And always remember
Yeah,
that.
there's even times where I forced to trade. There's times where I forced to trade due to members. They
Yeah,
want the next banker to come
yeah,
by, and that's when our loss comes around. You have to understand why that loss is there. You can't, although it's easy to think somebody's with an open mind.
muted already. Yeah, that happens a lot. Like you feel pressure, us as analysts, that sometimes we need to call something and sometimes it's not the right setup, and we screw. Sometimes we do it, and we don't feel good about people trying to risk their money if we don't feel that it was the right setup, or Or so remember, we take that trades too, so we lose money too.
Yeah, that's one thing I wanted to mention too. Like members complain after seeing like down like 5-10%. Like if you're taking, I promise you, majority of you, I know there's some big ballers out there, but if you're taking a loss, just know that my loss is way bigger than yours. You get me? And we're both in this together. You get me? We're all on the same mission. Well, I've been on the same mission for a while, right? Obviously to make money and you know, at the end of the day, you're buying freedom of time, right? The freedom is the main thing that you're really achieving when you trade, right? I remember, especially last year, I would trade for like 30 minutes, an hour, and every day, like consecutive. I believe it was for like 8 months, 9 months straight, 30 minutes, 1 hour, and I would be done with my day. And you know, I even got bored of that. You know, I didn't really, you know, I had a lot of freedom, but I love being on the computer. You get me? I love being behind the screen and just doing what I do, making people money, obviously myself money, right? It's even better when it comes down to that. But even then, I am not trading every day. I am not pulling the trigger every day. I am not waking up and, you know, with the adrenaline through the roof, ready to enter a trade at 9:31. Like, for example, a lot of people today, even Empanada himself today, he surprised me. Man is, you know, bullish on Amazon off the gates, out the gates, maybe not right out the gates, but I don't normally do that because, you know, I've gotten burned before. Even if your thesis is right, your analysis could be top notch. It's the first 30 minutes are just insane. A lot of people get their, this is where losses happen.
Yeah, and I completely agree. I mean, those are risky scalp plays that sometimes we do, and as I said, there are styles. I'm on your side. Every time that uh, I always tell people, Sleeps likes to. That's his style. He likes to trade out of the gate, and he has his way of watching. But I always tell them, wait until you can do what River does, which is you can draw your trends and just let the market do this thing. Normally, after 10:30 or 11, the ups and highs of whatever range is gonna be, are given, and then just wait until you can draw a trend, and then you can play breakouts, break up or down. That's it. It's easy. No need to stress yourself in every candle and try to search for a play.
Yeah, the first 30 minutes are tough. Like I mentioned, I'm gonna mention it again. That's where most of the losses happen. You need I promise you, tell yourself that the market doesn't open at 9:30 or 6:30 California time or Western time. Tell yourself that the market opens at 10 Eastern time, and 30 minutes later in the West Coast time, and I promise you, you will do a lot better. Now, there's definitely a lot of money, like those 200 percenters, 500 percenters. I might not be able to provide those because that's not my style, and I don't aim for those. But if I did every week, you know, that could definitely change. But I don't think people would be able to deal with losses, right? Because you have to get that risk management part down first before anything. And that's the first thing I mentioned, right? If that area in trading is covered and you got your, you know, your risk set in a way, you basically are putting the odds way in your favor now, right? Because you're not gonna blow your accounts. And you don't expect, I would say as a trader, you don't expect to lose more than 3 trades in a row, 5 trades in a row. And if you do, then we definitely got a problem. Right. And you got to figure that out yourself. Everybody's on their own journey. Individualized, you know, I didn't come to this point in my trading just you know, trading zero DTEs, swing trading. You have to find your own. And you definitely will. You just got to stay in the game and, you know, not blow your accounts. Don't be a degenerate. Even though I'm young, I do sports bet a lot. You see the money that I put on hockey games whatsoever, but that's only I'm only able to do that because of certain reasons, right? And I hope you guys understand that.
Yeah. And we have a question, which is Gail is asking how long should we stay on a long call? And she asked 30 minutes, 1 hour, half day. I never know how long to stay in a trade. So that's an interesting question because how long you're gonna be on a trade, it's gonna depend on your levels, in my opinion. And it's gonna be depending on what the plan is, what you're expecting to trade. Gail. Like if right we are like this is Apple. If I'm expecting that the move on Apple is gonna go all the way to 200 again, and I'm on the higher time frame, and this is what I'm looking for, and the move is still on my side, I will keep waiting until we reach those all-time highs, if that's what I'm expecting to. But I need to set up why I'm buying time and where I'm stopping out if it doesn't go my way. What's your opinion, Nando?
Yeah, it all comes down to your plan, right? If you have for example, Empanada showing this current channel now, and it's on the 4 hour, you're not gonna look at this setup, buy calls, and grab a weekly. Although you can probably make some money, but it's gonna be. I mean, if you're not experienced with that same setup, that same um look on the chart over and over, it might end up very bad for you. You get me? But if you plan your trade, like have everything set, like your stop loss, your targets, you'll know how to position. The positioning is everything, and I think that's the best thing that I do when it comes to swing trading. Right, I don't find my swings in the first hour, maybe even 2 hours of the market opening, possibly not even during power because there's some volatility, but most of my swings they come in fruition during like lunch hour. Right, the volume is very low, price has settled down. There's not too much at all volatility there, and you're able to form your bias. Okay, this happened. We had 4 hours or 3 hours of price action, and I can form my bias now. And most of the time, I'm looking for these swings during lunch hour, and I'm thinking back at the price action right out the gate, and I'm telling myself, damn, if I would have entered there, I would have lost a good amount of money. You get me? Once you go through a few experiences of those or few of those scenarios, like deja vu, right? You come back and you're like, yeah, I'm not making that same mistake again. And most of the time, you might not even take that trade opposite to what you would normally take back in the day. Now it's just you're not even trading that. You're avoiding that setup, avoiding that trade, and you're saving yourself money, which is similar to making money, right? It's obviously way better than, you know, being right on a day. I rather be zero on a day, flat. No money made, no money lost. That's way better. Look at it like that.
Thank you,
Absolutely.
Bill. Thank you so much.
Yeah. Great participation. Thank you, Nando, for jumping in and giving us your wisdom, your
Yeah, no,
opinion.
if you guys have questions, throw them out there because that's the one thing about me. Like I will alert, post my stuff. I know you guys love that, but it's all up to you guys how much you guys want to learn. Like I can receive 100 questions now and break it down in a way that you probably don't get from too many traders out there, right? Just a different perspective, like Empanada mentioned, right? It's always good to hear other people's thoughts and whatnot. So definitely ask your questions and take advantage of these lectures and these live streams because back when I first started trading in 2018, right out of high school, there wasn't much there. There was just those discords where they were just not necessarily pump and dump, but it was all money scheme stuff. Everybody was just there to make money off the Discord. They weren't really focused on the member, on their growth, explaining to them what they went through in their time, right? So yeah, once again, definitely take advantage and you guys get these lectures every day. This is the first Discord that really offers that. There's not one other Discord that I've been part of that does that. Not many people put their valuable time into Discord like I've seen here in OOT. So take advantage once again. And I've been a part of many, many Discords. So if I'm saying that, then you should definitely take advantage.
Yeah, absolutely. And that's why I love to, help people. I encourage everyone to go to assist and ask questions on every lecture because that's the only way that's why we learned. That's why we always learn. And we were looking for resources to learn, and it was really hard. And when the same happened to me when I ended up here and started seeing the information, the help, and the support. That's why I'm being here for I think 3 years and a half or something like that.
Yeah,
have
there's
a
a lot
que-
of guys in here that know their stuff. They know what they're talking about. They have the experience, the years behind their back. So the least thing you guys can do is really take advantage. And if you have to write down your questions and come through a lecture with 20 plus questions, that's what you got to do. You pay your money to be in here. So I would definitely look forward to taking advantage of that.
All right, guys, any more questions about LEAPS or anything that you like? Because we're talking about everything in general, so it's good.
I have a question. So let's say I have a leaps down like 6-7 month expiry. It's going on a downtrend range. So if it is getting reversal or is breaking out of the trend, what would be the stop loss percentage I need to see for my contract?
Okay, so I'll give you a quick breakdown. So the first thing we broke down here was Amazon, right? It was breaking past that down trending
Yeah.
channel that Empanada had drawn out. After I was concerned, I'm not gonna lie. Today in the morning, I was like, yeah, this candle right here, it might be my first loss in the month of May. It might. You get me? It might cause me that loss, but what comes after that is just your risk management to your account, whatever is according to your account. There's maybe like another 50 cents to a dollar that I would have to indefinitely cut that. So you're breaking past that trend line or that channel, and it comes down to what your account can afford. You get me? My account, even though I say I could afford, I would have stopped out on another like 50 cent dollar move. My account could probably hold for another dollar, maybe $2 move, but it's not worth it. You get me? So once you feel like your account's being affected and it's not the best for you, yeah, just exit that. It's not even about your trade being invalidated or this and this and that. It's just your account and what's according to your size.
All right, thank you.
Yeah. Any more questions, guys? We have Nando, we have me. Take your shots. If you have any doubts, any problems with any trade today, that we have a couple of more minutes that we can answer your questions. So anything?
Yeah, and to add to that Amazon channel, that downtrending channel, lower highs were always in place. Even after today's move, the previous lower high wasn't invalidated, so there wasn't too much concern if I'm looking at it now in hindsight. Obviously, everything is different in hindsight. Higher lows lower highs just continue to keep forming, and that's what matters.
There you go. Let's take these ones away.
Yeah, those lower highs are key. It all comes down to price action. Lower highs, higher lows, double bottoms, triple bottoms, in head and shoulders, and I look at all that. You get me? And I don't take a trade because it formed the double bottom. There's a lot more to it. And I try to break it down in my tab channel as much as I can. Yeah, but it could be so simple for you guys. Just look for the lower highs, higher lows, and obviously the higher the time frame, the better, right? If you're on the 1 minute and you're looking at higher lows, lower highs, expect them to be invalidated often. All right. But if you're on the 1 hour, I would say minimum, you're able to spot the trend. I think that's more important. And one thing that you'll notice about me and you'll learn from me is that I buy time on my positions. And this is why we continue to win trade after trade after trade. You get me? You're not going to get stopped out off of one candle move because volatility's there. Fucking QQQ was making new highs. This shit was annoying today. Not gonna lie to you, I did not expect that, but although that still didn't affect my trade much. You know what I mean? Before I did enter that trade, my thesis was already set. The S&P 500 is the most important thing. It was making new highs, reaching new levels. Amazon could not care less about any of that. So that one thing, I'm not gonna lie, it's what made me pull the trigger. And yeah, hopefully we get paid someday this week. I'm sure we will.
Yeah, this Amazon looks amazing if it breaks this the 20 for me in my view with the 20 daily SMA is gonna just flush until here at least, and then we have the levels, so we can go back on next week and see how this chart play out. That's gonna be fun. Next Monday we can put it back here and see where we are.
Yeah, I mean, my main thing is that the S&P 500 is making new highs and this isn't reacting. So my question is, what's Amazon gonna do when we really downtrend? And obviously, break past 520 on the S&P 500 and going higher, especially after that huge sell-off. When I took a break, well, not really a break. I had stuff to actually do in life, but we were like around like 520 and stuff. So I saw that move go all the way back down to maybe like 500 close on the S&P 500. And obviously that reversal was huge. So you can't really be too short now. You can't tell yourself the S&P 500 has ran. Amazon hasn't really shown that correlation. So let me just short this. There's a lot more that comes into play for me to pull that trigger. That's what I want you guys to understand. It's not just seeing a triple top, a double bottom, and longing or shorting. It's way deeper than that. And you have to pay attention to my tab. You will learn stuff from me, even though I haven't broken down it fully to my potential, but we will get there, right? Step by step, little by little. Can't be all at once. So right now there's just swing trades in there. I do trade SPY and a few other tech names, often throughout the week, but that's on my own personal account. That's not really my account where I focus on, members and my alerts for them where I really have to manage. But on my main account, I'm buying swings with 2-3 months of time.
Yeah.
You get me? And that portfolio is doing very well. It's doing more well than the portfolio I have for members exclusively. You get me? And that probably says a lot. You get me? Especially in this market. This market has been very directional, so it's been easy to swing trade. But there's definitely those weeks, those like 2 weeks, 15-day periods or even up to a month where it feels like everything is against you, but it's just you have not experience too much time in the market. Once you do, there'll come a phase where everything just starts clicking. You'll realize why you're making these mistakes, why this is happening. There's this mentor of mine. He used to tell me all the time, like one day everything just starts clicking. Everything. One day everything just starts clicking, but that all depends on you get me? There's people that get to like these billionaires, millionaires, they didn't become millionaires, billionaires at the age of fucking I'm 23. At 23, 20, right? It took them years, up to 40, 50 years. So use that as motivation for yourself, right? And I think that's in hindsight, that's very good to know because a lot of people think that they have a bad year and their life is over. You have a long way to go. Even for those people that are in their 30s, I know because it's a fucking variety of ages in these discords. I believe everybody's like I think that everybody's around my age, but obviously that's not the truth. It's not a reality. But one bad year is never everything. There's a lot more to it, but you put in your work and you'll notice this by my channel. I put in that work. You put in that work and things will one day just start clicking all of a sudden.
I'm a good example of that, Nando. I've been around for a little bit longer than you. I'm a little bit older, and
How old are you, Empanada?
I'm 46.
No.
Yes, sir. Can be your dad.
Nah, man, you breaking my heart. I'm thinking Empanada's in his 20s.
Yeah, I'm 46.
46 is damn, I'm not gonna lie. I'll be honest with you. My mom's not even in her 40s yet.
Yeah, but hey, I'm the what you're saying right now. It's what people say that they believe that if they go bad in one year and they go broke and then this and the other, and and life, has its own way to, show you different, ways and how you have to thrive and all of that. I've been around, man. So that's as I said, it's funny because normally I'm probably one of the oldest from the whole Discord, and I have a blast with all of you guys here all the time because first of all, no one exchange ages that much, but I've learned from everyone, and it doesn't matter like about the age or anything. We're here for the same goal, which is freedom, as you
We're on the
said.
same mission.
Sorry?
We're on the same mission. Yeah, we're on the same mission, and we're
Yeah.
here. It does making money myself is a great feeling. I'm sure Empanada loves making money, but man, when you guys tag me in games and I'm like, damn, I made this guy $500 on the day, bro, that wasn't regular back in my day. You get me those 500. It
Yeah.
wasn't regular in my mom's and my parents' day. So I'm looking at it and bro, and it motivates me. You get me? It keeps me going. And that feels even way better than me making money. You get me? Even when I lose money, I'm like, damn, I feel bad for them. I don't even feel bad for myself for losing money.
Yeah.
You get me?
Yeah.
Because I know where they are. And I've been there before, but at the end of the day, risk management is everything. You get that one part down, you will never blow your account. You will always stay alive in the game. You will live to see tomorrow. And who knows, you might go on voice chat and take a XPX call by flips and make 1,000% on your money. And all your problems in your eyes and your perspective, your point of view and your perception, all your problems are solved. But at the end of the day, remember, it's all money at the end of the day. It's all money. And this is why this isn't a industry full of skill and what you know, what you don't know. Because like I mentioned, my friends, they try to break it down, read books. They learned a lot, but they just can't execute it. It's a little deep into that, but you get your little your basics down, and you get a few good mentors around you, people that can guide you in the right direction. You'll be good, but definitely don't keep making the same mistake over and over and over,
That's
especially
what
Hey,
I
trading
mean.
Nando.
zero T's.
Nando, I have a question regarding risk management. Let's say out of 100%, on a Sunday, I saw some stock which I would like to do a swing, maybe one or two. So how many percentage of your portfolio you take a contract? I learned a lot in last 2 months for the swings. When to average down, when to do position sizing, how many I want to take. Like today, Amazon, I have a 158 average. I didn't do much because I take only one or two, and then I keep doing average down because I can see it's keep falling, keep falling. But the reason is how many on a one alert, how many percentage of your portfolio you take as a risk, or how bigger or smaller? How do you see?
So this would depend. Let's say I buy a lot of time on my position. I'm probably sizing more than usual. You get me? But wait, what's your name on the Discord? I'll tag you into a post here
Viral,
that say that again.
Viral, viral.
Oh, you're my guy. You always we messaged before.
Yeah, yeah. PayPal, ammo, so many. Yeah.
And
Yeah,
he's
so look, I just tagged you in trade floor with a message that I shared in the beginning of my tab when I first started in OOT. It's just I broke down how I would manage on my account. So it says for my option trades, I managed on an account of 25,000. You'll notice, like for example, on what was it? What was that contract that was worth a good amount of money? I forget. I'm not sure what it was. It's not yeah, Amazon. There you go. So the contract is 196, right? Per
Yeah.
contract. So in total, I'm buying almost like $600 of it, right? 600
Right.
bucks. But look at the message that I tagged you in trade floor. That says for my option trades, I manage on an account of 25,000. You'll notice how I never size with more than 5%, which is 1,250 of an account of 25,000, right? And then you'll
Right.
see most of the time my sizing is even less than 500 per trade. And then I explain responsible sizing means less emotion in the trade, which will allow you to manage that trade a lot better. And then I broke it down to obviously not everybody has an account of 25,000, even more obviously, but I have a thing written down for somebody with an account of 10,000 and how I would size if I had that account size. So obviously this is personal. You don't have to tell me what your account size is, but that same post that I made there in the beginning of my tab, I can make it according to what your account size is. So your account size might not be 25,000 or 10,000. It could be maybe 5,000. So I would make my own, template or new post for your account, but it's very easy to understand. If you can see the post that I tagged you in,
Yep.
it's very easy. You basically can just look at the percentages that I'm using there. And if your account is not up 10,000, 25,000, like I mentioned before, do it to your recording. I have another template for an account of 2,500. And if your account is around there, I can send that to you, and that's how I would look forward into sizing my account. So for example, this $10,000 account, initially you would size with 5%, but it tells you 5% size is $500, right? A 10% stop loss would be $50. 30% win equals 150 in your account. If your risk reward is the 1 to 3, 50 to 150, a loss will decrease your account by 0.5%. A win will increase your account by 1.5%. And then this is the important thing here. You can lose the first 3 trades, win the fourth one, and then 1 out of 4 trades has to be right to break even. You can lose the first 2 trades, $50 on the first one, $50 on the second one. On the third one, win plus 150, and 1 out of 3 trades has to be right to be profitable. So if you look at this template that I broke down already, and you really apply everything to it, and you follow your rules, your risk management, main importantly, you will do very good. Trust me. This is why I'm able to do very good. I'm not able to provide all those plays in my tab for no reason. Trust me, I don't wake up and just say, let me just long this, let me just buy calls here and let's get paid. It's a lot more to that. It's the experience that I have with everything. It doesn't just have to be risk management, swing trading, day trading, zero DTEs. It's a lot. It's the experience of everything.
So Nando, for the Amazon, I also had the eye and I was also looking about it, and you posted that one. On that day, from 2 days, I didn't do anything, not even the stock I saw. From 196, I was scalping up, down, up, down, up, down, and I make it at 183, my average. And then on the first day, today, 30 minutes, I thought it's a good buy. And I I just average at 133, so it become 158. Now, for the one alert, can we go more percentage, whatever you showed in that list? Are you very strict about it that I can't take risk more if we are not taking more trades? If I'm taking only one, is that fine to take more risk? I mean, it's just numbers, right?
Wait, can you take more what? Can you take more what? I didn't hear that part.
So you already show the 5%, 10%, or 15%. But if I'm taking only one swing, or which I'm looking like I want to do this one, or I'm having a faith on my lines, so can I go like 10, 15% of my portfolio on one alert and do scalping and try to average down and keep going until it's in my range?
Yeah, so if you're sizing, I wouldn't say irresponsibly. 10-15% is a good amount, especially if you're following somebody that doesn't, provide too many losing trades. If you are sizing, if you feel like you're sizing way much more than you should, just take profit quicker than I do, because sometimes it will hurt us. I know Amazon was at the lows of today. Amazon was paying a good amount of money, or like, I mean, not too crazy, like 8%, 10% in the green,
Yes.
which is nothing, right? For me, I'm not taking 8-10%. But if you're over here sizing more than what you normally do, or because you think that I'm not gonna miss a trade, or that Nando doesn't provide losses, because I do lose too, but I very, very rarely though. But if you did size in that trade more than you should have, all you have to do is take profit quicker. Always leave runners though, right? Your runners is where things change. I remember when I had an issue where I would cut my winners too short and I would hold my losers too long. Everybody has this problem. You have to work on that too. Everybody does. You get me? And if you don't work on that, you'll eventually you'll forcibly have to work on that. You get me? Because if you aren't able to let your winners run, your losers are gonna eat you up. It's gonna feel like an impossible race. It's gonna feel impossible to make it break even or even become a profitable trader. So, and I'm gonna show you this guy. I'm gonna break this down even better for those following my tab because it's only gonna get better from here. The only thing I've been doing in that tab channel is providing swing trades. Anybody can do that. Post a chart. Oh, this looks good. Yeah, let's get paid. But I'm going deeper into what I'm putting out. So it's gonna help you guys into like and the reason I mentioned that is because we have to get through this phase of where you're able to hold your winners and cut your losers quick, right? So we're gonna hit this one trade. I'm not sure if it's gonna be on Amazon, but it's gonna be like a 200%, 250%, and from there we're gonna take those gains made from there. And everybody that follow that same trade, according to what I have to tell them, we are going to continue to trade with the profit that's made from that one trade, and we will never go in the red just from that one trade. Just to show you guys something, you get me? You don't have to be a profitable trader for a whole year and then start taking trades in a. How could I explain it better? Let me see. So yeah, we'll have that one banger trade, and basically we'll break it down to the point where you won't ever go in the red if you have your risk management set based on the profit that you made off that one, right? So if I bought 10 contracts at $100 of Amazon and they went to, let's say 300, right? 200%, we'll use the next swing trades with that same gain, that same profit, and we'll rinse and repeat, and we'll never be able. The only thing with this is if you're going to do that, if you're going to be committed to that, there's going to be a few losses, a few more losses than usual because you're cutting those losers shortly, right? Anything that doesn't look good to me, like Amazon, I probably would have cut that if I'm on that timing already, right? But we didn't cut that obviously because we have time on that, and we aren't really focusing on cutting our losers early and letting our winners run. And clearly, obviously, if we would have cut Amazon early, we would have missed out on a little bit amount of money. But there's gonna be a gradual, improvement in my tab. It's not just swing alerts and we get paid. We'll go deeper into that where you guys will be able to copy exactly what I do and understand my my point of view, because I feel like that's the most important thing.
All right. Thank you, Nando.
No problem, man.
All right,
Take care.
guys. That's awesome. Thank you, Nando, for your participation. I'm gonna call it a day. That was a great lecture on LEAPS and information about everything. Thank you for co-hosting and answer, everyone questions and doubts, and for encourage everyone to go to the lectures. I hope that if anyone else have any questions to me or to Nando, please DM us. We are open all the time. We're all the time on the computer, so feel free to send us any questions, messages, or any doubts that you have. And I hope that you have a great night, and see you all tomorrow. Nando, thank you very much.
No problem, Empanada. If anything, I'll try to be here every time that you have a lecture going on. And we trade very similar. It's not too far apart. We do you might trade a few individuals that I don't mess with too often, but we definitely have a similar trading style. So I'll try to make it here every time that you have your lecture going on and give my little input, because I know it's important to everybody.
It's always useful. Absolutely. Thank you very much. All right, guys. Take care. Thank you very much. Good night.
Appreciate y'all.
Same.